Hello everyone, welcome to the new series of Drishti IAS. I am Ritu and today we are going to discuss an important topic of economy, which is Nifty at 20,000 and what it indicates in the economic system. So in today's class we are going to discuss about Nifty and Sensex and what is the impact of stock exchanges in an economic system and how RBI's monetary policy is decided by this Nifty and Sensex. So moving to the points of discussion. So first of all, we are going to discuss the news and its relevance, and then we'll have a brief introduction about Nifty and Sensex, and then reasons for the market rise, and then we are also going to discuss that what are the concerns related to the market rise, and after that we are going to discuss that what should investor do at this point of time. It means that when market is on rising condition, then what should investor do in this point of time, and then practice question for prelims and then mains. So moving to the news part. So recently we all know that on 9th and 10th September, India has concluded G20 summit, and many experts are saying that it's because of G20 summit this market is in rising condition, because many of the countries just like France, Saudi Arabia and many countries had promised to India that they will invest in the India, and so many financial and economic agreement have been signed in this kind of G20 summit, and 20 countries are involved in this thing. So that's why this market is in rising condition, because the probability of the market has been increased and investor wants to invest in India, and because of this Nifty has breached the mark of 20,000 for the first time in the history, and Sensex has also breached the mark of 67,000 for the first time in the history, and because India has made the expensive market in the world. So this is the brief news we are going to discuss in today's class. So this topic is important from GS3 perspective. So moving on. So moving to the next slide. Next slide is about brief introduction about Nifty and Sensex. So there are two kinds of exchanges in the country. The first is National Stock Exchange and the second is Bombay Stock Exchange. And there is an index of all these stock exchanges. So Nifty belongs to the National Stock Exchange and the Sensex belong to the Bombay Stock Exchange. So these are the indexes of the stock exchanges. So this is a brief about these two topics. So moving to the Sensex part. So what is this Sensex? So in Sensex over 6,000 company has been listed, and what are the criteria for the listment of the Sensex? So the first criteria is that market capitalization, the second is trading frequency, the third is high liquidity, industry representation and average daily turnover. And here the sample of 30 companies have been taken. So these are the indexes of the Bombay Stock Exchange. So you must have familiar with all these terms. So here I am going to make you understand that what is market capitalization. Suppose that if you have 5 shares of 1 crore rupees and each has the value of 1 crore. So what is the exact value? So it is 5,000 crore. But in the market, if you will sell and invest, so it may be subtract or it may be added, so it can be by 7,000. So this is called market capitalization. So this is brief about the Sensex. So moving to the next slide. Next slide is about Nifty. So Nifty is an index of National Stock Exchange, and here sample of 50 companies have been taken, and by these sample we analyze the market trends, that market trends are in the rising condition or not, or they are in the declining condition. And what are the criteria for the listment in the Nifty? So there are 3 criteria. The first criteria is liquidity, float adjustment and domicile. It should be Indian. So here variety of companies are listed in Nifty, such as that IT companies, consumer goods, financial services, telecommunication. So all these companies are the part of the Nifty group. So moving to the next slide. So next slide is about why is market rising. So what are the reasons for the market rise? The first is that constant foreign inflows in India, and the second is that economy expanded by 7.8%, and third is domestic investment. So all these things are correlational in nature. If there will be the foreign inflow in the India, the market and the economic condition of the India will increase and it will be in a better position. And if there will be much foreign influence in the Indian market, then there will be the rise by the domestic investment also, because the competition will increase and they will compete with each other. So if there will be investment from both sides, domestic investment as well as the foreign investment, then economic condition will rise. So these three are, correlation in nature. And according to A. Balasubramaniam, who is the MD and CEO of Aditya Birla Sun Life, he says that, whatever the condition of Indian market is now, that is very unsustainable and, stable position. And why it is in stable position? Because of, we are not in a cyclic move. We have shifted from cyclic structure to the stable and, much sustained structure. So that's why it is going to stay for 10 to 15 years. And because of these kind of market sentiments, investor wants to invest in India. That's why market is in rise condition. So these are the reasons for the market rise. So moving on. Moving to the next slide, it is about the concerns. So what are the concerns related to this market rise? So the first concern is that external demand is expected to remain a drag because of the protracted growth in the Western economy. So recently we have seen that, Fitch had downgraded the US economic system, and it has downgraded from AAA to AA plus. And why they have downgraded? Because of the debt cycle in the US, and the second thing is that, governance issues. Because of these two issues, the Fitch has downgraded the US rating system. And so many economies are, interlinked with the US economic system, including India also. So if there will be the downgrade in US economy, the Indian economy will also affected, because they are interlinked with each other. And in the global world, so many countries are interlinked with each other. If India is not even directly related to the US, the other countries are related to the US. So that will definitely impact the Indian economy. The second thing is that agricultural growth in India has slowed because of the less and deficient monsoon. We have seen that this time we have very deficient monsoon, and because of the less monsoon, we do not have much agricultural productivity, and because of that we can see that, food inflation will also rise. And if food inflation will rise, the RBI has to change its stance. So all these things are also correlational in nature, and they are also interlinked. So these are the concerns related, that if there will be the market rising conditions, so what are the concern and what will be the impact on Indians? So these are the impacts. So moving on. So next slide is about what should investor do at this stage. So, what are the experts saying regarding this thing? So there is two factors in the market. The first thing is growth, and second is valuation. So what is the difference between growth and valuation? Suppose that if you have a company named A. So, investor has valued this company by 1 billion. So investor decide the value of a company. But if you will look for the growth side, the company is not rising, it is not opening its branch, it's not expanding in the market. Its just value is 1 billion. So it does not decide that what is its actual value and how much it is running in the market. So investors and so many economic experts are saying that, the investor should always focus on the growth side rather than the valuation side. So they should not go for the value, that if the company has a value of 1 billion or 1 trillion, they should not go for this. They should always go for the growth aspect of the company. If the company is growing, so they can also increase their value. So here the valuation becomes the secondary. So the growth aspect is the mandatory. On the other hand, they are also saying that, investors should prevent themselves by investing in a lump sum investment. So what is this lump sum investment? So lump sum investment is that, if any investor is investing large sums of money in one go, so they should prevent themselves by such kind of investment. They should have a systematic investment. So these are the suggestions by the economic experts to the investor. And what other suggestion they have given? So other suggestion is that, investor must be cautious towards mid and small caps. So why they are warning against mid and small caps? Because mid and small caps are very volatile in nature and they are very risky to invest. On the other hand, large caps are less volatile and less risky to invest. And there are many companies who are called as blue chip companies. They are nationally reputed companies and more reliable and more authentic to invest in it. So investors are saying that, you should invest in large caps company rather than small and mid companies because of the risky and volatility issues. That's why these are the suggestion by the investors. So moving to the today's question. So today's question is about, consider the following statement regarding Bombay Stock Exchange. And your first statement is, Bombay Stock Exchange is the oldest stock exchange in the India as well as Asia. It was founded by Premchand Roychand in 1875 And third statement is it is an integral component of $1 trillion club. How many statements given above are correct? Only one, only two, all three, none. You have to answer this in the comment section. Moving to the mains part. So the mains question is, stock markets are the backbone and reflector of a country's economic progress. Analyze. So first of all, in intro, what you have to introduce? You have to introduce stock market. You have to give brief introduction of the stock market. Then coming to the demand of the question, what is the demand of the question? Here they are asking, stock markets are the backbone and reflector of the country's economic system. So first of all, you have to define that what are the factors that they are reflector of the economic system. So you already have defined that what is the stock market, and you can also write the example just like Bombay Stock Exchange, National Stock Exchange and other stock exchanges. And then coming to that, how they are the backbone and reflector of Indian economic system or any economic system. So you have to first write that, if there will be the stock exchange, they are the reflector of that. There will be the investment from the foreign authority, FDI. So here there will be the rise in foreign investment. And then if there will be the rise in foreign investment, the domestic company will also invest in an economic system because of the competition between domestic and foreign entities. So if there will be investment from both sides, the employment opportunity will rise, the GDP will be the good reflector. So these all factors shows that, they are backbone and reflector of any economic system. And because of this, all circumstances, the RBI has, or any central bank has to change its stance, because it shows that what is the market condition, what is the economic condition, and they had to decide the inflation rate, monetary policy rate according to the economic system. So in this way, they are the backbone of any economic system. So I hope you like this lecture. If you have any queries related to this lecture, kindly ask in the comment section. Thank you.